Hey traders, welcome to Charts and Huge Mugs of Coffee. We're rocking the big coffee today. This is that kind of week. We've got still to come. Well, ADP has already been released. We've got GDP still to come, core PCE still to come, and of course, non-farm payroll. That's just the scheduled macroeconomic data for this week. And that alone would have made this week really in terms of significance to getting an idea of where the monetary policy is heading. That alone would be massive. But at the same time that all this is happening, we've also got today Caterpillar, Meta, Microsoft, Qualcomm. Tomorrow we've got MasterCard, Lilly, McDonald's, Apple, Amgen, Amazon. These are all high concentration weighted stocks. I curate a list specific to, not every little random company that's reporting earnings. I look specifically at, and you can do this on Estimize as well. In fact, I teach our members how to do this. Go to Estimize, start up a free account, follow a curated list. Getting a cutesy little calendar with the logos, on it for the week is not actually going to help with a trade setup. The best way to handle earnings, if you want to deal with this nonsense at all, is remember, this is tail wags the dog season. A stock can make a disproportionate move on an entire sector or index, right? And then we also know that a lot of times, some of the more interesting action, let me show you Apple, for example. So this is coming out in a day and 6 hours, right? After the close on the 1st. So what I'm able to do is with this, look at what the previous consensus Wall Street range, Estimize range, which is what the service is, look at what it was, right? And then I know it's kind of hard to see with the black background, but you get an idea of there's a range, a Wall Street range, the Estimize range, the consensus, and then the actual. And the whole idea here is to be able to say, look, what am I expecting? What is right now priced in? And that's where this gets really interesting. Maybe we'll do a separate breakdown of Estimize and the way that I use it going into earnings. But it's about going into earnings. It's not about making a guess 2 or 3 days, 1 or 2 days, the day of earnings, about putting on a position and which way does it go. A lot of times, and what are some of the names that are coming out for earnings today? Anything anyone's looking at for earnings today? I mean, since we're on the topic, because this is another big part of this week. Is there a stock out there that y'all are looking at for earnings? And I'll show you really quickly if it's something y'all are interested in. I'm trying to think of a name that's pretty big. I think who else is reporting today? Aside from, well, let's just use Meta. Let's just go into Meta. That's today. I think Booking is today as well. They're fairly high concentration weighted. So I'm going to turn off the dark reader. So watch your eyes. All right, there we go. And I'm going to go down to this area here. Okay. So if you take a look at, and again, I want to focus on high concentration weighted stocks. What does that mean? Find stocks in sectors that are at least a top 10 or a top 15 name, right? That's always going to be helpful. So take a peek. The consensus for Wall Street's $5.23 earnings per share. This is for Meta. The estimized consensus is higher. What do you think is priced in? It's the estimized consensus. It's not the Wall Street consensus. So for this number to really beat and move higher, it's got to print above 554, not 523. And how many times have you seen earnings come out where there is this kind of, it comes across the bug on CNBC or whatever, and but they beat Wall Street consensus and it's moving down. It could be on earnings per share. It could be on revenue. And it's going down. You're thinking, what the heck? It's because that is not what was necessarily expected. So here's another great example. This is Booking. If Booking prints 1734, that will likely trigger a sell-off. Depending, and now there's a lot of magic tricks that these companies have gotten very good at doing during their earnings calls, right? So this is separate from the earnings call. That's the wild card. Think of the earnings calls as the difference between the monetary policy statement from the Federal Reserve and Jerome Powell at the presser 30 minutes later. That's sometimes the best way to differentiate between the two, because the monetary policy is one interpretation. Jerome picks up the mic and it could be a whole other thing. So there's that wild card of the call. But if you take a look at, again, whether it's revenue or consensus, a lot of times the consensus could be higher than the Wall Street. That's your whisper number. And these are the best whisper numbers I've ever dealt with. And this is how I understand incrementally, starting 4 weeks out, starting 6 weeks out, incrementally where that is moving. And that's how I'll play earnings. It's not about the day of earnings. It's usually about the lead up. So let's go to the charts of the 2 or 3. I see eBay here. Sure. Microsoft. So take a look as we get into this expectation, right? There's not an uptrend here. Meta is at a very heavy spot. In fact, when we looked at the Meta numbers, the revenue per share, revenue and the earnings per share are higher than the Wall Street. That's what's priced in. Doesn't mean that they're going to, and this is the guesswork, which is why I never play this binary game of earnings. But if the expectations are for higher, right? That's that whisper number, the estimated consensus, and that thing is still moving lower. I want nothing to do with it. Microsoft is interesting. You can see the last few days it's been moving higher. I'd be curious. Let's go take a look. Kind of impromptu breakdown of how I look at earnings. And it's not about today. Please, gang, it's not about today. It's the 4 to 6 weeks leading up into earnings. So if I take a look at what's going on here, take a look at the consensus in Wall Street are 6 cents apart, as opposed to some of the other differences I showed you there. Someone mentioned eBay. All right, let's go take a look at eBay. See here. Here we go. 136. So this is 2 cents apart on eBay, right? And it's really some of those more egregious differences where something far more optimistic is priced in, where these stocks are really in, I would say, in harm's way to a certain degree. Here's eBay. Who asked about Eddie? Here's the eBay. No trend really here. So if this doesn't look like a trade before earnings, it's not a trade, right? What else did I mention? eBay, Microsoft, Meta, Booking. So if it doesn't look like a trade before earnings, it's likely not a trade. So Booking's been moving higher. And why is it moving higher? You saw that egregious difference between earnings per share and revenue on the Wall Street expectation versus the whisper number that estimates consensus. But for Booking to beat, they're going to have to beat that higher number. This could be a tricky one. And it's already rallied into that. It's already rallied into that expectation. The thinking is, all right, it's going to be better than expected. That gets priced in now, right? So just something to think about as we're in probably one of the more, intense earnings seasons. What about Apple? Apple's moving higher. You see here, like a lot of stocks are. There's been quite a good rally in front of the next May meeting. It's been a pretty good rally. There's no expectation for a cut, by the way. So here's Apple. Okay, so if you take a look, consensus is for 166. So this is pretty much a 4-cent chasm, right? Wall Street consensus is 162. The estimate is 166, just 4 cents. And so for Apple to beat, at least for earnings per share, I could do the same thing for revenue, probably not out of the spectrum of reality. This is actually looking like a little premature, but it could be more of a neutral bullish stance in Apple. There's a lot to be desired here. But if it doesn't look like a setup, earnings is not the setup, right? So that's where I think a lot of folks get badly burnt during this season. And probably the worst thing is they forget that if a Microsoft, a Meta, what is that going to land on? Definitely NASDAQ, S&P, more specifically XLK and XLC. Where would Apple land? XLK, where would that hit? NASDAQ, S&P. So we want to look at, if this is a pebble being dropped into a pond, where are all the reverberations likely to go? Where are those ripples likely to go, with that particular event? And the higher the concentration weighting of that stock, right, the more ripples, if not tidal waves, it could cause. All right, so let's jump on over to our look at the broader averages. This morning, what are we dealing with? So a couple key things to know about this morning. Let's take a look at the 5-minute chart, and let's take a look at the daily time frame. Daily time frame is still very much in a range, gang. There's nothing to glean from yellow, 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 green, yellow. This is a very neutral environment. It's definitely a tug of war in terms of coming off the lows, but being in neutral. There's no bullishness here, and there's not nearly as much bearishness as there was. When you take a look at the 5-minute chart of the S&P, we're below almost 1.5%. The previous session close. Previous session close is 55.82 3/4, and you can see here we're below that. This morning across all 4 of the indices, if you're in the room with me in the Sector Secrets Mastery, the first thing I'm going to do is I'm going to go into the notes of our room. So, and you know what? Let me give you a little sneak peek. I gave you a sneak peek on earnings, so let me give you an idea. So here are the notes, right? And I just kind of scroll. This is the week of the notes we're dealing with right now. And then I go to Wednesday. These are all the notes we keep in the room, right? So then I open up Wednesday and I say, you know what? What do we got? I got some day trading rules for everyone to follow. And then what I want to do is, I set up the morning. And the first thing I'm going to do is say, here, I'm going to do it early, right? 9/11. All 4 indices are below the previous session close, right? The PSC and the anchored volume weighted average price, right, are simple, what I call lines in the sand, right? What is a line in the sand? It's a sentiment level, right? We know in the jargon of line in the sand, we know on one side of that line, this is the expected outcome, or this is the consequence. And on the other side of the line, this is the outcome, or this is the expectation. And so if we're below the previous session close, if we're below that anchored VWAP, both of those are very simple tools to use, right? No mathematical Cirque du Soleil needed. I know that I'm on kind of a bearish side of movement, right? Doesn't mean I'm going to short here. Although, if you're wondering, Rog, if you were a futures trader, not waiting for the bell, what could you do? Well, you can see we were very, very close to the resistance level. Let me grab my drawing tools here. We're very, very close to the resistance levels of the, right in here, daily price movement range. That gold zone is downward. I would expect downward pressure to be triggering in this area, right? So this is where, if there's resistance to be had, it's in this area. I'm not going to buy up here. The big mistake a lot of traders make is after a rally, they go, oh, yep, it's time to buy. No. That is not a buy trigger. And this is where a lot of momentum traders get into a lot of trouble, right? That is not a buy level. What that is strength rallying into, right, resistance. Strength rallying into resistance. Now, you might say, Rog, is this a layer of support? It could be. It absolutely could be. Do I want to get into the S&P or the NASDAQ for that matter, knowing what earnings are coming out today after the bell with a longer term expectation of follow through? I do not. Short term, this could be a very interesting level, right? This would be a 1 hour trade, maybe 1 to 3 day time horizon in terms of how long I could be in the trade. But in the meantime, I'm going to be looking at short setups, right? So if I look at the 5-minute time frame as a day trader, now remember, what's the difference between being, say, long on a 1 hour time frame and being, for example, in a short sell on a 5-minute time frame? Well, if this continues to sink, it's going to land me in this area. If I have a 1 to 3 day time horizon, yeah, we could see a little bit of movement higher. If I've got, for a day trade on a 5-minute time frame, it's today. My expectation is maybe 30, 40, 50 minutes, maybe a couple hours, right? So if I get up in here, it's long puts, right? And that's where, again, a lot of traders would use multiple time frame confirmation. What that is going to confirm is indeed you're late to the trade. I've done it. I've taught it. Don't like it. If we're waiting for all of these to line up like rockets, by the time we take the trade we're thinking about, chances are the bulk of the move has already happened. If I'm waiting for a 1 hour chart to agree with a 5-minute, I'm going to miss that 5-minute time frame opportunity. If I'm using a 5-minute chart to, say, confirm what I'm seeing on the 1 hour, Why? Right? Why? The 1 hour has its own lines and levels. The 1 hour has its own zones, and the 1 hour has its own risk, and the 1 hour has its own levels of resistance that oftentimes will have nothing to do with what we're seeing on the 5. So it's one of those things that sounds really good in theory, but in practice, it makes very little sense to say one time frame has to agree with another. That time frame has a job. It's reflecting a certain slice of psychology. So there might be a little something for lots of traders here. Short-term day trading bears or slightly short-term swing trading bulls. It could be a very interesting day. But we'll see. It's very, very early. But that's the way I would kind of start the morning in the room. All right, the next thing I'm going to do is start to compare which of these time frames would be good for short the rip, right? So then I would go about, let's say we were looking at the ES. Then I would say, all right, if I want to short the ES shortly after the bell, that's the zone. And as long as I'm below the previous session close and some other key levels, like we mentioned here, the lines in the sand, that's going to be my expectation for movement. However, I also want to remember that if I'm willing to be a different kind of trader, there is a setup that's forming on the daily time frame with that neutral candle in the gray zone, right? So there might be, at this point, you might say, Rag, it looks like, depending on whether you want to day trade or whether you want to swing trade, there are two different setups. Absolutely. And that's where, for a lot of traders, a day like today, especially with all the data that's going to come out, if you haven't even thought about, gosh, Rag, what are we dealing with data-wise today? A lot, right? Here's Wednesday. We already had ADP, advanced GDP, and we have core PCE. We have a jobs data, a growth number, and now an inflation metric. Probably would make a lot of sense to wait until after 10 o'clock because this number is the Federal Reserve's pet inflation metric. This is the one that Powell and company have factored in to their models. So if they're talking about inflation moving higher, they're talking about inflation moving lower. This is the metric that they're looking at, this PCE, not the CPI. And so it might make sense. You might say, all right, well, what else is on the schedule today, right? For April 30th. It is the end of the month. There's a lot of gyrations, not as intense as the end of the quarter, but it is the end of the month. Folks are going to jockey around for a position, thinking about what positions they want to close out this month, what they might want to keep open for next month. And then we're going to hear from the president later on tonight. There's a lot going on. And this whole week is stacked up like this. Is this a good week? One of the things I mentioned to our members is if there's a week to sort of take a breath, see where we are in a neutral environment on a lot of these indices, this would be the week to take a nice breath. Just take a breath and let's just see what emerges. Now, it doesn't mean we're flat, but it means I'm trading around some of these hot zones. For example, we scaled out of Kroger yesterday. We had a long position in Kroger. We scaled out. We've moved to break even. The last few weeks, we've been long Walmart. We're still long Walmart, right? We've got a May expiration, the May 16, 90 calls. We're $6 in the money at this point after having bought an at the money Walmart call. So we do have some positions. They're a little bit more defensive. They're a little bit more on the peripheral of what the hot zones, these macroeconomic data releases, and what these earnings could present. So that's where right now it makes a lot of sense to be positioned kind of out on the peripheral. Okay, gang. So that's Charts and Coffee today. A little different take. Hopefully that gives you a good insight into what we do in the mastery and what I'll be doing here in just about 20 seconds. All right, gang. Be good to each other. I'll see you tomorrow, same time, same station.